Alrighty, we're live. So, hey everyone who's joined so far. We're just going to wait a couple of minutes just to let everyone trickle in who's coming through. Yeah, and we'll just wait a few minutes for that to occur. And just as a heads up, if you do have a question, just chuck it in the comments for now, and we'll invite you on the screen to ask your question once we go live or once everyone's kind of trickled in as well.
Yeah, this is our first time doing it, so bear with us. I think last year we did Zoom webinar. Was definitely not as fun as this. This is a fun new tool for me.
Yeah. But I guess like the benefit of this is now we should be live on LinkedIn and we should be live on YouTube as well.
All right,
Alrighty.
we've got people trickling in, so
Yeah,
get started.
Yeah, welcome everyone. Thank you so much for joining today, and it's great to have everyone on the call. So for those who don't know me, my name is Bragan. I'm part of the team here at Formwork Labs, and just as an overview, Formwork Labs, we're a construction tech accelerator designed to support founders who are building solutions in the built environment. And our applications are open till January 4th. Now, just as a quick overview, today's AMA is focused on the Formwork Labs program, but we're happy to answer any questions that you have more broadly. So that's related to like VC, brick and mortar ventures, or just the construction tech ecosystem more generally. And I'm also joined by Alice. So, if you want to give a quick introduction to yourself as well.
Yeah. Hey everyone, thanks for joining. So I'm Alice. I'm one of the investors at Brick and Mortar Ventures, and I lead our Formwork Labs efforts. My background's in construction, worked at DPR Construction for a good number of years, building hospitals and data centers, and transitioned into the venture capital side about 6.5 years ago. So been investing for a little while. We invest globally. We've got a team in the US, in Europe, as well as in India, looking after construction tech all around the world. We've done investments globally. And the fun, I guess, little fun fact for the next cohort of Formwork Labs is the last 4 cohorts we've actually invested out of Fund 2. Now we're starting to do investments out of Fund 3. So the cohort number 5 that we're running in 2026 is going to be our first class of Formwork Labs, getting the investments from Fund 3. So the investments do come from Brick and Mortar's fund. And yeah, I'm excited to answer any questions about Formwork Labs, Brick and Mortar, or anything construction. I don't know. It is a little bit of a AMA, so I guess we're open to anything.
All right, awesome. Thanks, Alice. So before we jump into questions, I'm just going to quickly explain how we're going to make this AMA work so everything runs smoothly. So if you have a questions, if you could chuck it in the comments for us or just say you have a question. And what we're going to do is we're going to answer them one by one based on the order in which they come through. And what we're going to do, if you're on the StreamYard link, is we're going to invite you to the studio so that you can appear on the screen and ask your question to us. So we can get a bit of interaction and any follow-ups as well. So what we'll do is we'll invite you to the screen. It will appear as a pop-up on your screen, and just click accept, and then we can show you on the screen as well. So that's the way it works. As you drop in the questions, we'll invite you to our studio to show your screen, and then you can ask us the question. And I can see a few questions coming through, including we were promised a cat as well, Alice. So, but yeah, I think Kai has the first question, so we'll be inviting you to the studio so that you can ask your question as well, which I assume is happening right now. Alrighty. So just give it a second.
Good morning. Can you see me? Can you hear me?
Yes, we can. Hey, Kai.
You're live.
Well, good morning.
Good morning.
So the questions I have are specifically around go-to-market strategies, and more specifically, conducting pilots. And first of all, let me give a little bit of context. Bregan, you and I spoke very briefly in Boston. It was very brief, so maybe you don't remember. But what has just recently informed my question is your latest article, what makes a content sales team truly successful, and so it was very helpful, seeing that chart with the timeline on the sales cycle. And just to give you a bit of context, I've been in software product design for the past 25 years, the last 15 in enterprise software. So I'm very familiar with the lengthy sales cycles and the difficulty that comes from introducing a product that is, even though it's aimed to help, there's that friction point when it's going to actually impact operations, or it's going to have an effect on the habits that a team or an operation currently has. So the first question was the go-to-market strategies. What we're currently seeing is this this sequence of steps where you let everybody know on LinkedIn that you exist, right? Next, you join groups, and fortunately in construction, the groups abound, and you start to get more specific to draw attention to the solution, and you hope to therethrough get some responses, and of course mostly through direct networking. And interestingly enough, even when you know directly people that are at the leadership level at construction companies, it still takes so much time and effort to get a conversation going, to get a foot in the door. And so I would like to know, from your end, what other approaches or strategies have you do you recommend?
Alice, do you want to go first?
Yeah, so it definitely depends on what your product is and what problem you're solving. And we've seen this across, all different types of technology. So as an example, if you're selling something to the field, right? Sometimes it doesn't necessarily make sense to go join all these LinkedIn groups or do things on LinkedIn, just because your audience is not going to be in those places. So for field-focused sales, some of the best strategies that we've seen is like, go meet your customers where they're at, go to construction sites, go to job site trailers, go out and meet them where they're doing their work. And yeah, their time is valuable. So you do have to, figure out how do you shorten your pitch in like a very succinct manner so that, as you're talking to these people, like you can really kind of, hit them like with something that's short, snappy, and it's like, are you facing this problem? Maybe have a tool to go solve it, or, maybe you have to have a more strategic way of going about that, where you need to specifically find people in the field who are doing X, Y, Z. And as they're doing that task, maybe that's the right time to approach them, right? So there's a little bit of like making sure you have the right pitch, but there's also a timing thing, right? So if we step outside of the field, if you talk to any large contractor, or maybe even small ones for that matter, sometimes they have quarterly meetings or annual meetings where they're talking about strategy and where they want to spend their money in terms of buying solutions or piloting solutions, or what is that year's strategic initiative? Because sometimes that changes from a year-to-year basis. Like as an example, if there's regulation change, say about solar, right? So we're here in the US. If there's something about solar regulation change that may really impact if you're building a technology in the solar space, that may impact how you approach that, right? You may not go directly to the customers anymore. You may have to go to the energy companies or someone else. So, and if that is like this year's focus, right, you have to make sure that you understand that from the customer side. And maybe they're like, yeah, well, solar regulation change, we're going to stop all solar. Then you're like, oh, well, I got to pivot, right? So there's just a lot of stuff going on. And I think, why construction go to market is so hard is it's so dependent on what is the product you're building, what is the what is the problem that you're solving, and then even from a timing perspective, right? Is that really top of mind right now? Because sometimes it's like just not the flavor of the month, honestly. And even if you're fundraising, sometimes it's not the VC's flavor of the month. Like right now, it's still all about AI companies. And if you're not an AI company, sadly, like you're kind of casted off a little bit to the side, right? And sometimes it's like, all right, don't fundraise this year, wait until next year to fundraise. So it is a pretty complex topic, and I'm happy to like dig into it. Maybe we can revisit this later on if there, if we cycle through a couple of the other questions, like we can even talk specifically about what you're doing and offer any suggestions around go-to-market.
Sure. Yeah, and the only thing that I'd add to that is like obviously it depends on the problem, and then what you want to think about is like really clearly defining who your ideal customer persona is by going, hey, like who's actually gaining the value of my solution? And then once you've defined that, go, where do these people live and how can I interact with them and find them in a group setting or in a low cost way? And then taking another step back, there's also a timing question of, when does my solution actually provide the most value on a project, and when do I have to enter the project? So there's two of ICP, of ideal customer persona, but then also like in some ways ideal like type of project. So timing of entry to the project as well as the persona of the person. So you kind of got to understand both of those things, and that's why the more people you talk to, you'll see, hey, these types of projects we provide a lot of value, and this is the persona in this project, and this is where we live. So this is how we can easily access them at scale.
Do I still have time to ask the follow-up question?
Sorry, Kai, we might just have to move on. But if you drop me a message on LinkedIn, I'm happy to jump on a call straight after, just because there's a few coming through. But if it hasn't come through, you can drop another note and we'll cycle back to it at the end. Sorry about that.
No problem. Okay, thank you.
Thank you.
What's up, guys? How are y'all?
Good. How are you?
Doing good, doing good. So my name's Frank Mackart. I am currently an account manager at Whitecap Construction Supply. And me and my co-founder are launching Build Peak. We're an AI-driven construction supply marketplace aiming to connect commercial construction supply companies like Whitecap with contractors out in the field. Currently in development with the V1 of our MVP, ready to launch a soft pilot in January. So we're out in the field talking with contractors, talking with suppliers. We've got a couple suppliers lined up to run the pilot with us and a couple contractors. My question is kind of regarding funding. So we're in this weird pre-revenue, pre-user stage right now, getting ready to launch pilot. We're bootstrapping it. I'm working on this 40 hours a week in addition to my day job, as is my co-founder. And we're kind of in this weird struggle spot for funding, because all the VCs I've talked to up to this point have pretty much, okay, come back when you've got some revenue, come back when you've got some users, come back when you've got a little more traction, which is understandable, right? And we're getting ready to launch the pilot. We're gonna bootstrap it while staying under the radar so that we don't get fired from our current employers. So trying to manage that, it's been a little tricky. And I just kind of wanted to see some strategies on early funding, accelerator programs, angel investors, and when is the right time. I'm trying to build out relationships both with local venture capital firms here in Atlanta and others like y'all's, so that we have the contacts and some relationships when we get ready for a seed round. But this is completely outside of my world. I'm a construction guy. I work out in the field. Funding and all of this stuff is brand new to me. So I'm just looking for advice.
Yeah.
Alice, this is you. Yeah.
Yeah. Well, first, congrats on taking the first step. I mean, it is
Thank you.
A little scary, but exciting at the same time. And hopefully none of your colleagues see this. I'm kidding. I'm kidding. But no, what I would say is, just depending on what you are doing, sometimes it's easier to raise money with no traction, right? So if you look at the overall like kind of funding cycle, usually people do like friends and family or angels as like their first kind of in the pre-seed stage, right? And then at the seed stage, you definitely need to have some type of traction. Nowadays we are seeing some of these like crazy AI companies that are raising $10 to $20 million seed rounds with nothing. I would say that's like probably on the consumer side, or some of these like very like crazy ideas, right, where you may necessarily need that type of funding to really get started. Like if you're building a new foundation model for something, right, sometimes it warrants that large amount of funding. But with where you're at today, what I would say is, if you're able to bootstrap until you get through to some of those pilots, sometimes your first few customers could end up being, early investors in the company, right? If you really walk them over and they see value, they come trickle in. And that is really good validation for investors who may not know anything about, the construction industry. So I would say that's definitely a good start. I would look at any like local ecosystem kind of program. So you're in Atlanta, there's a lot of programs out there. There's also like a lot of big companies that are headquartered out there, and they may do some programs like Home Depot's out there, right? I know they're kind of a competitor to Whitecap, but Home Depot has their headquarters out there. A ton of big companies are in Atlanta. I do know there is like a startup ecosystem in Atlanta. So it'd be good to like go out there, meet people in that system. There's a lot of angel investors, early investors there. Even if it's not like an official VC, there's probably some type of funding that you can find by just going to some of those events. And you should go to events that may not even be directly relevant to construction, right? Because you're building a marketplace. There's probably marketplace type accelerator programs or marketplace type meetups and that type of stuff. So I would just try to network, anything that's local, because at the early stages, like it is still very important to have that kind of in-person relationship with anyone who's going to back you. So I would kind of test that out. With what you're doing, I don't know if there are any like grants or that type of funding. I don't.
Not that I could find anyways. And that's kind of what we're doing right now. So we've been getting involved with the Atlanta Tech Village here locally, signed up for one of their pitch events, doing one of their lunches this week. And then we're doing another one with ATDC in Atlanta, which is a part of Atlanta Tech. So we signed up for their pitch night this Thursday. So we're doing that, getting some of the stuff scheduled for January, and really just trying to network and build some of those relationships to make the funding part a little easier. And we did run into that too with the first supplier we pitched this to, did offer to invest in it. The downside with that is he wants to run it very slowly, offered me a full-time job to come work for him, and didn't want us to do any type of venture capital and wanted a huge equity stake. So trying to find the middle ground, because at the end of the day, I don't want to give this thing away. I want to run it. I want to build it. It's got huge potential. So just trying to kind of figure out the early stages to this.
Yeah. And I would say like you're doing all the right things. Sometimes it just take a bit longer, right? Like honestly, marketplaces right now are not what's hot. Like I kind of mentioned this a little bit earlier, like a lot of people are just focused on AI deals. Like it is kind of, not great for anyone that's doing, general software solutions or anything that's not, purely AI focused. But people are also talking about some AI bubble that we're in, right? So sometimes it may just be a timing thing where like, like I mentioned, it may not be the flavor of the month for VCs right now. So that's also the really hard part about fundraising too, with any of the founders that have been out on this journey. It's like, sometimes you have to just you may have to hold off until it's a better funding cycle. Like we've got later stage construction tech companies in our portfolio, and this year was just not a good year to fundraise for anything that wasn't AI. And, they're all companies with really great metrics that would have been able to raise last year. But this year was just a very weird year. So I wouldn't get discouraged. Like I would try to bootstrap for as long as you can. And what I would say is like, if people are not as excited about, exactly what you're doing, what your customers are or whatnot, like any of that, like if they don't, if none of that gets them excited, what will get them excited is metrics. If you can show that you have very fast growth, that will get people interested. And, a lot of investors will invest purely based on KPIs and that. So, I would try to, go for as long as you can, but definitely keep the networking, because you just never know who you might meet at one of these events. Something might click. They may really like you as a founder and just fully back you as a founder, regardless of the idea.
Awesome. Thank you, guys. I appreciate it.
Yeah.
Thanks, Mike.
Hey, Simon, is that? Thanks for calling in while you're driving.
Hi, can you guys hear me?
Yeah, we can.
All right, there seems to be something off with my audio, but two questions, if I may, and thank you for your time today. First question: there's so many failures in this area. How do we differentiate from all of those big failures? And then the second question is, we're kind of at the other extreme of where some of the participants are today, but we're trying to make that transition from venture to private equity growth, as we're at 120 million run rate now. Any advice? Because it's like starting from scratch all over again.
Yeah. So the first question, the failures in differentiating, what I would say is, like, you probably want to talk a little bit about market timing and why does it make sense now. So we've seen this with drones in the past, and frankly, like, it does end up, I guess, reducing your pipeline of potential investors, just because if, any investor who has invested in drones back in like the early 2010s, they probably lost a lot of money. They probably, have just like negative sentiment around that area to begin with. As investors, we're supposed to change our minds over time. So we really shouldn't kind of dwell on any of the failures. So what I would say is, like, really dig in whether or not it's a market timing thing, or maybe you're taking advantage of, another venture-backed company that was able to, raise venture dollars and really educate the market. And you may get to a point where, now that the market is fully educated about a new solution, you're taking advantage of that by not necessarily being the, first person in or something like that. I think we lost Simon, but we'll kind of continue answering the question. So from a differentiation perspective, I would say, like, I wouldn't necessarily focus too much on, the problem you're solving and that type of stuff, because, like, chances are the reason why it didn't work could be conditions that are outside of, how big is the problem, if you are actually solving a big problem for the industry. And for that second question, making the jump from VC to, I guess, like growth equity is my guess on, what you're talking about there. For construction, we have a lot of private equity and growth equity investors looking at the space. So I feel like there should be a good amount of pipeline for those that are interested. But the big challenge is, like, with those types of investors, they are looking for steady growth and kind of path to profitability if you're not profitable already. Whereas for venture capital, a lot of those investors are still okay with startups that are running the red. Though in the last couple of years, we have seen VC investors really want startups that, have a path to, cash flow break even and things like that, just because the volatility of what venture investors are interested in is pretty high. So I think Simon's not on, so we'll just carry on.
But hi, how are you going?
Good. I'm Scott. Thanks for the invite. I think I got in a little early, but that's okay. So I'm out of the Midwest. I run an architecture firm. I'm forming a tech user group. I messaged Alice a few times on LinkedIn about this. I'm pulling together just a small group of 4 or 5 companies. What I want to do is identify problems we have in the space and find technology solutions to solve our problems. So I guess my question is for the two of you: what's the best way to work with you guys to help, I guess, funnel solutions our way, that we can do tests and pilots and try to find solutions to our problems?
Yeah, so I guess speaking on the brick and mortar side, it'd be great if you worked with all of our portfolio companies, right? We're always trying to help push those solutions. But what I would say is, from working with many different companies in the industry, a lot of companies have different appetites for risk. So, some of our portfolio companies are very early, some of them are later stage. There's other companies that are even later stage than some of the ones that we've invested in. So depending on what particular company or problem that they're solving, like the way that we've worked with industry is actually recommend a couple of different companies, right? Like obviously we're backing who we think are the best companies, but say you have a someone in your group and they only want to work with companies that have more than 20 people because it's a big enterprise, and you want to make sure that there's a customer success solution or customer success function to help with implementation and that type of stuff, right? Whereas like we may have done an investment in a company that's, especially through our Formwork Labs program, a lot of the times they're just a couple of founders. They've got something working, but they may not be able to support, a huge enterprise that requires a level of implementation or handholding that company cannot provide. So, like Bragen has met with and worked with many different startups. So what I would say is like the best approach may be, if you have a list of problems that you're looking to solve, we can probably recommend companies that, are possible solutions to those problems. And that may be a good start.
Got it. Thank you.
Thanks, Scott. Hey, how you going?
Hi, my name is Jan. I'm an architect and I live in Spain. And I founded an AI procurement agent for architecture and construction. I'm post MVP. I'm running the pilot. We've been doing quite a bit in the last month to get this thing going. And I'm quite interested in knowing what the criteria, how exactly you evaluate startups for this year's cohorts. I'm asking because I've spoken to many people in the last 6 months and I've heard just about everything. So I would like to know a little bit, how do you determine who is of interest for your program, and are there any red flags? You mentioned AI. Well, I'm on the AI side. I'm actually kind of lucky. Is there anything else that you look out for? Is there something regarding the team, the stage, the fundraising? Is there anything that we should know before applying?
Excellent question. I would say the lens that we put into evaluating, those that we accept into the program is a little bit of a lens that brick and mortar would put into evaluating companies. So we do look at these companies as, potential big exits for our fund. Like we're not just accepting companies to go, have them like meet with the industry or, like we are so I guess a little bit on brick and mortar, like we are a institutional VC fund and we invest to make a lot of money. And I'm just really honest about that. Like if you talk to any of the other accelerator programs out there, they may have different reasons why they're doing it, right? Especially if it's a corporate related one, they may just be looking for solutions to pilot, or they may just be looking for solutions to, check a box of a strategic initiative. We are not that. We are investing in companies that we believe are going to be some of the biggest companies in the construction tech space. So having said that, like we evaluate these companies very similar to, I would say, other like tier 1 accelerator programs. So, when we first launched, we said we wanted to be the YC for construction tech. YC, Y Combinator, is a very well-respected program. They help startups fundraise. And if you look at, maybe not the recent years, but when they first started, they had some of the best performing fund metrics out there, right? And a lot of that has to do with the community that they've built and the support of, later stage companies coming back to, help out. So we're set up in that similar way. So when we evaluate companies, we do look at what is the problem that they're solving? How big is that problem? How big can this company get? Can this be a category winner? And also, can this company go public, right? We're not looking for companies that are going to build something that's going to get acquired by Autodesk in a couple of years, right? And I can say that because Autodesk is an LP, and we're trying to invest in the biggest companies. We're not trying to like be a feeder to get sold to Autodesk, Procore, Bentley, any of those guys. So we look at that. We definitely look at the founding team. What is their experience? Are they the best team to go solve this problem? A lot of the times, it's like, is there the right mix of the founding team, right? So we'll dig into, different team backgrounds. If you look at our application, we definitely talk a little bit about, like give us the, team backgrounds and how did you guys meet and all that, because, a lot of that is very important, especially for the earliest years of a startup and how they set up team culture. How do they work together? Are they able to hire people? Can they tell a great story? You have to make sure that, you can raise money from other investors too, who don't know anything about the industry, right? Like we know the industry. Sometimes it's a little bit easier for us to understand, but we really push the founders to make sure that they can explain, the problem in a very simple way to other investors. So I don't know if there's like anything that's like, higher ranking versus the others, because all of this kind of has to come together to work. But I will say that like, for us, we are looking very closely at, I guess, construction industry trends and how people are buying software, how people are using software. So you mentioned this whole AI thing, right? Like right now, there's a lot of contractors and architects, or I guess like the whole AEC space. There's a lot of people with AI pilot money, right? So AI companies are getting a lot of pilots, but whether or not they actually transition into a full contract and whether or not it's something that gets implemented and actually goes across the entire enterprise, that's a whole nother question. So, we're learning a lot about how the industry is buying new software and if the timing is right too. So sometimes, the construction industry may be a year or two behind, your typical kind of, tech company adoption for some of these solutions. So we do have a little bit of like a market timing thing that comes into play. But yeah, for the most part, like we're picking people to join the program that we believe can, take the company to an IPO exit.
Okay, so scalability and networking effect is a big thing.
That as well. Yeah, which is why as part of the program, we do spend a lot of time digging into go-to-market strategies, sales strategies, marketing strategies. We have a lot of classes that, kind of bring in people from the construction industry to talk about how do they handle pilots, how do you navigate a big organization? How do you pitch, something to the CFO so that they can sign the check, right? Especially as contract values get bigger, you need to understand how to do the ROI calculations. That's super easy for CFO, not necessarily the person using the tool, right? So there's a lot of these complicated things to navigate. And yeah, we bring a lot of that in our program.
Okay, perfect. Thank you very much for answering.
Awesome. Thank you. Nice to meet you.
Thanks, Jan.
Hey.
Hey, LD.
Hey, how are you guys? I'm LD, founder of Docio Technologies, and we're building the decision intelligence layer for construction. And we're starting with superintendents. You kind of answered a little bit of my question with our previous guest, but I want to jump into this concept that Burgan actually brought up a while ago. And there's been a lot of conversation around this recently around how incumbents are going to be able to kill startups because they are the systems of record.
Yep.
And Burgan talked about this concept of this new system of work and how the transition to AI seems to be accelerating that. And so I want to understand your perspective on that during the due diligence process. How are you guys analyzing startups and seeing if they can be killed by an incumbent for lack of a better term? And also, do you feel like, how do you view this shift from system of record to system of work? Is this a true hair on fire problem that teams need to be prioritizing? And are you bullish on these type of companies that are capturing and trying to leverage these new categories of operational or decision cycle data?
Yeah. Alice, do you know the reference to the system of work LD was mentioning?
I know you wrote an article about it. So if you want to just give context to everyone.
Yeah. So just for context, like I guess like system of record might be like your Procore. So what this Procore has is all the final decision data, all the outcome data lives in Procore. And the way that they've become really sticky is everyone has to integrate into Procore so that you have all the information in one place. And for me as a contractor, it's very hard for me to move off Procore because everything's feeding into Procore. And anytime I need to look up a decision, anytime I need to make these small actions, everything's in Procore. The argument I was making is that in the future with AI, what we're now capturing is something called system of work. So when we are having a conversational AI assistant and I'm making a proposal, I'm telling the AI system exactly how I operate, of like, you know, tweak this, tailor this, add this piece of information. And what we have is, you know, from start to like from cradle to grave, we have every single piece of like engineering kind of ingenuity and thought coming into the process. So instead of Procore only having the final decision data, now this AI system has the entire system of work in the process of record. And what I was saying is like the data gravity is now going towards the system of work where I want a solution that completes a task for me. And when we're training a model, understanding how you complete a task is more important than having just like the final outcome. So if you look at a Procore, we look at it and we think about it and go, can we train an AI model of this, or can we train an AI model with the system of work? And I think that this is a new format of data capture and it hasn't really come about, and we don't quite understand how much more of additional value it provides in terms of fine-tuning data. But it does sound like having this reasoning logic could be more useful in the future. And I think, you know, with that setup, Alice, I'd actually be really curious to hear your thoughts on that.
Yeah, I say like on the, I guess on the system of record piece, like I think there is definitely value to a lot of that information there, but some can argue that like, you know, some of that information is not right, right? So if you're thinking about this from like a BIM context, you have a lot of BIM data that, you know, are the as-built actually, you know, updated at the end of a job, and is any of that correct, right? So I know there are a lot of, you know, decisions that are made during the construction, I guess, project. And a lot of that, you know, you try to capture as much of that as possible into your system of record. And, you know, in some sense, this like early AI, I think a lot of that is getting quote unquote trained on this historical information, right? You know, there's some argument to be made that like, yeah, it's really good to go look at all of your historical data and try to do any type of like predictive analytics or stuff like that. So it does seem like that's very, I would say like surface level, quote unquote AI, in the sense that like, that's just statistics. Like, I don't even know if that's like AI, right? You're basically just looking at a crap ton of data and trying to infer, you know, insights to it and pull in insights and maybe feed it to people in a, you know, real, like a just-in-time manner or something like that, right? But to the other point on, you know, like actually how things are getting done, I think that is the interesting thing that we're seeing now is people are trying to develop these AI agents that are looking at and trying to understand, you know, how are you doing tasks, especially since, you know, in construction, a lot of times you're pulling information from, you know, 3 or 4 different sources and then trying to, you know, do something with that information, or you're pulling information from here, you're doing something to it and then sending it somewhere else and whatnot. So, you know, I think that whole workflow is very important. And for us to actually be more productive and efficient, you do need to understand those workflows. But at the same time, in construction, you know, the way that people do things are so different from project to project, or even within the same construction site. People's processes for doing things are very different, right? Especially because we have all these tools like Excel spreadsheets, and a lot of people are pulling information out, doing something to Excel and then sending it somewhere else, right? But, you know, the whatever people are doing in Excel could vary from person to person, even on the same construction site, right? So I would say like capturing all of that information is very important if we want to truly automate a lot of the like small tasks across a construction site. And that's more from like an office kind of perspective. Obviously, if we want to get into, you know, this whole physical AI, and if you're looking at construction, you know, a big portion of monetary spend and work is, you know, physical stuff in the field. None of that data exists, right? Whether it is, you know, quote unquote system of record, you know, you may have like this task was complete, but, you know, the steps for which was it done correctly before it was complete, like none of that is captured anywhere. So in some sense, like we kind of need to capture that, maybe need to capture that, or do we kind of leapfrog if we just go directly into understanding those workflows and maybe changing those workflows with new technologies or robotics or anything like that. So I don't know if that actually answers your question, because I don't really have like a stance.
Yeah. Well, I guess going back to that, let's go back to the incumbents killing startups, right? And having that system of no. I mean, you're on track, right? This is the information we were looking for, but how is that factored into your due diligence, right? Is this a product or a team or a solution that an incumbent can immediately kill once they get no sound of it, right? They know that it exists. How do you guys factor that? Do you guys not care about it because you understand the process of how incumbent works? Just want to get some insight on that part as well.
No, that's a great question. I totally just had ADD. And
no, the system of work to in record is a very interesting, concept that I think people need to start having a little bit more conversation around. I think it's a hard problem to solve. And Bragan and I talked about this whole decision cycle and capturing the contextual information outside of the system of record, right? How can that get us to better decisioning on construction projects? So,
on the incumbent question, what I would say is what we're seeing right now is a lot of the incumbents are being a lot more aware of what's going on in the realm of like all kind of, anything that's automation, right? And in some sense, like one can say, some of them may start feeling like, okay, I need to have an AI strategy, right? So are they going to go buy up a bunch of companies? Are they going to build their own? And we have seen in the past where big incumbents have bought companies to kill, right? So there is definitely that risk. What I would say though, is a lot of these incumbents, frankly, they move slow, right? And there is a reason why there is an opportunity for a lot of startups to come play in this space. But that being said, for these startups, I think you really need to understand, like, is there actually a path of replacing the incumbent if that is if that is what you want to do? Or are you going to build almost like a UI on top of it, right? Because in some sense, like, you could think of some of these like system of records as ERP systems, like even if they're not, right? Technically, like ACC or Procore can be seen as an ERP system because, like if they're on a project that's 5 years long, right? It's going to be another 5 years before they transition off. So there's going to be this like really slow, painful way of transitioning people off of some of these solutions to something else. And they're super sticky, right? That's why they're valued, that's why their stock price is trading at this or that, right? So for the startups, I would really think about like, is there actually a chance of you to replace these guys? And obviously now AI makes it easier, right? AI is making it easier for you to organize data. You can export out a ton of information and reorganize it in a very kind of inexpensive, automated way to go push into something else, right? And in theory, like there are probably easier ways to, build a wrapper on top of something so that you're interfacing with something that looks newer or easier, but then in the back end, you may have agents that are like, double entering things into an old system or something like that, right? So I honestly don't know what's going to happen. Like I would like for there to be a ACC competitor or a Procore competitor, because that's what I do as a venture capitalist, right? Like I'm trying to find the next whatever. But the foothold that these companies have on the industry is a big foothold. So I would really think about like, there's a lot of startups that are pitching like, I'm going to go, take over Procore, right? Like, yeah, that sounds great. And a lot of VCs are going to throw money at that. But the reality of it is, how hard is that going to be? And, can you actually build a product where you can get enough people excited, right? And there's also that issue of, if I'm a construction company, I'm already paying for Procore. Why would I pay for another project management solution to go like test out or pilot, right? So there's a lot of these like really real factors that come into like how doable it is for these incumbents to get replaced. And even if the incumbents don't innovate or whatever, they always have the opportunity to acquire. So I think, in the next couple of years, we will probably see a lot of these, I would say, smaller AI companies get picked up by incumbents just because, it's a lot cheaper for say Autodesk to go buy a startup with really good tech and a good team that you can kind of absorb into the company than to try to set something up internally, run it, you know, with all the bureaucracies within a company. So yeah, it'll be interesting to see. I don't have a full answer on like what's going to happen, but I will bet there will be a lot of dead AI startups in the next, like, I don't know, 12 to 18 months, just because like there's just so many and contractors are piloting, but I don't think all of them are gonna make it through to the next cycle. And we're starting to see more contractors building their own AI tools. So there's also that you're competing with. You're no longer just competing with the incumbents. You're competing with and I say contractors, but AEC companies that are building their own or buying their own, for that matter. Bragan and I were just talking about the AECOM.
Yeah.
Everyone's talking about that, right? It's like, oh my God, you know? So yeah, everyone's buying AI companies these days.
Yeah, I think one of the reasons I see a lot of these AI startups dying is because they're not optimizing for adoption and usage, right? They're building super heavy, clunky tools that are positioned as replacing Procore, right, today. My approach is always going to be drive value, get ROI as quickly as possible. Then if there's an opportunity, expand product. What do you think about that approach to grow? I don't know if there's anybody else in the studio, I'm sorry. But what do you think about that approach to effectively building a path to replace an incumbent by creating that stickiness, immediate value, and then expanding product over time?
I'll answer because I like this question. Yeah. I think it used to be a good approach, and it's funny because I was thinking about this because I know it's Bragan's one of Bragan's favorite articles that I wrote about the Trojan horse, right? Mm-hmm. I don't know if there's a Trojan horse anymore. Like there's so many companies building all these like quote unquote wedges and those are all very simple to build now. It's just the rate at which you can build software has just drastically reduced in the last couple of years, where I think it's really hard to have a wedge, because if you have a good wedge, someone else is going to build that same wedge. So I think there's a path to definitely providing value to your customers and building more product and having them love your product and win them over. But I also don't know if that's going to be within a venture timeframe, right? Because there's so much more competition. And if you're fundamentally doing something so new, so different, and so inexpensively, like I think it's really hard to compete, especially since like so much of the industry is already saturated with technologies that they're already paying for. So if you're doing something that's like way cheaper, but then if you're selling product for way cheaper, like how are you going to get your revenue growth for investors to be interested, right? So like in some sense, like venture capitalists may not be the best for some of these solutions that are actually going to change the industry. And it may just need a longer time frame, or you're just not going to hit the revenue growth that investors need. But that could be genuinely a very good product for industry. And there's some great examples out there. Great example is Plexus. I don't know if you guys have come across Chad Pearson at Plexus, but I had a conversation with him and he's like, I hate venture capital, and part of it is like sometimes when VCs get on your cap table, they force you to grow in ways that the industry is just not good for the industry and that the industry does not like. And that will ruin your company. Even if you have the best relationships with your customers, VCs will force you to grow. They will force you to increase your contract values. They will make you do things that may not be in the best interest of the industry. So, you better build value quickly. You better build product quickly. I think now is the time to do that. But at the same time, like there's just also a ton of competition. So you also have to like figure out like what is the actual value you're adding? Is a business model the right business model? And yeah, but as a VC, I'm looking for the next Procore. But
just something
hard. Thank you.
Yeah, just something to add to that, LD, as well is I think, touching on what Alice said in terms of wedges and like AI making it easier for people to copy, like we always talk about like, what's your offensive wedge, what's your defensive to like stay inside the company, but something to also consider is how do you reduce your customer acquisition cost and start to think about distribution as an advantage. So, interestingly, in like a couple of the other cohorts and some of the startups we talked to is like, some of them have really unique kind of distribution channels, is that like running specific events for their ICP. And what that allows them to do is to get in front of their customer at a really low cost, have those conversations and have a faster kind of go-to-market strategy. And once you're in, it's more difficult to be pulled out. And even if someone else comes in with the same product, as soon as you start building defensive features and copying their products, you're already in the company and you already have that pilot and you already have that potential contract. It's very difficult for them to go out. So, being and really understanding the uniqueness of your go-to-market strategy and your distribution wedge, that can be a really valuable go-to-market strategy in construction tech. We do have some waiting in the studio, so thank you so much for that question as well.
Hi guys, nice to meet you.
Manuel.
Hey.
I have a couple of questions. One is, you mentioned some minutes ago that Autodesk is part of the LP pool, right? And I wonder, when you select the companies for the program, is also the mission of the LPs taken into consideration when selecting?
Absolutely not. So we love our LPs and we love that they're supporting the overall kind of construction tech ecosystem in the space. But we do not have to invest in what our LPs are interested in. Like I mentioned, we're in it for financial returns. We're trying to invest in the best companies that are going to become the biggest companies of our industry. So we do learn a lot from our LPs and we hear about, how do they see the industry changing in the next 5-10 years and all of that. But you also have to take it with a grain of salt that, our LP base contains, some of the biggest players in the industry, right? And they're thinking long timelines. And the things that get them excited may not necessarily be the things that get the 90% of construction excited. So we also have to navigate that. And that's why we have, through our cohort mentors and a lot of our outreach, we actually have a lot of other players in the industry that we work with, really just to keep grounded and to understand, across the entire construction industry, what are the problems that they're still interested in solving. If you think about some of the biggest contractors, they may be looking for solutions that are at the cutting edge of, what they think is to be the new way of doing construction. But to be honest, some of those companies are probably 10, 20 years out from what, a smaller size contractor may be adopting, just because of, size, scale, the types of projects they're doing and all that. So, sorry, that was a long-winded way of saying we love our LPs, but we do not invest purely because they like something or they're interested in something or it's aligned with their strategic initiative. We are investing to make money.
Mm-hmm. Yeah. I'm leading a robotic company, and I have seen that it's a little bit more difficult to finance a robotic company. What is Formwork Labs looking in robotic companies?
So we have accepted, I think we've probably accepted at least one hardware robotics company in every cohort. That actually wasn't designed that way. It's more that, at the end of the day, construction is a very physical industry. I personally believe that robotics will have a very big impact on our space. The past couple of years have been challenging in the sense that, with robotics, it does require pretty high CapEx from, R&D or getting, your first pilot out on site. We have seen in just the last year that the cost and the time reduction for, getting ready to get out on site has drastically reduced. And I think that sensor costs have come down, development costs have come down. One can say, there have been some tariff impact, but even with the tariff impact, I think the tools that you have today to help with robotics development has really made it accessible and a lot less expensive to go from zero to robot in the field. And I think that's very exciting for our industry. At the same time, I am hearing that there are large EPC firms that are developing their own robotics. So I think when it comes to robotics, it really depends on, what is the problem you're solving? What is the scope of work? How are you thinking about go to market? What is the sector you're focusing on? Because instead of worrying about you competing with other robotics companies and some of the incumbents that may build their own, you're now going to be competing with contractors who are developing their own new equipment in robotics because they see it as a competitive advantage from their competitors to go faster and to be able to win more work. So I think that's a very interesting shift that we've seen like really just recently about contractors developing their own stuff, or at least more of it. But on the robotics front, I would say like raising 0 to Series A is probably easy. I think Series B and up is still fairly challenging just because we don't have that many late stage hardware and robotics investors just yet. But I am hoping with, Jensen Huang's, talking about NVIDIA and physical AI and all that, I'm hoping that gets into the ears of a lot of later stage investors where they are going to put more money to work in later stage kind of hardware and robotics.
Okay, thank you. Thank you very much.
Thanks for joining. All right.
Hey.
Jeff. Oh, hey. How's it going? So my name is Jeff. I'm in Indianapolis, running kind of an early stage marketplace in the home improvement space. I actually just saw that Block Renovations bought BuildZoom, which I think is in the brick and mortar portfolio.
A little unofficially, Darren Beck,
logo's there. So I guess that kind of just like maybe backs into my question of residential versus commercial. There seems to be like a very hard line in prop tech where kind of like the residential side almost goes to more like consumer investors and less to construction folks, which like kind of hurts my heart because I'm a civil engineer myself. But yeah, I'm just interested to hear like where the trend is in the portfolio, and also considering the applications. Is there interest? Is it scary? Yeah, just think about how you think about that would be interesting to learn more about.
Yeah. So you bring up a good point in terms of kind of this, prop tech world and construction tech. A lot of outside investors will see construction tech as a subsector of prop tech. The way that we have it set up is, if you drew a Venn diagram between prop tech and industrial tech, that's construction tech, and that's where brick and mortar sits. So we have done investments in companies that are in the residential space. But for us, given that we are focused on making construction more productive and more efficient, there still has to be a pretty big component of that company that has to do with design, construction, and operations and maintenance. So on the residential side, we don't invest in fractional ownership or, sales and marketing of new single family residential or any of that type of stuff. That is squarely within prop tech investors and where they invest. For us, we would do more like, anything on home renovation. So we have looked at a good number of home renovation marketplaces and that type of stuff. And Home Depot is an LP in our fund, right? And they supply a lot of, to a lot of DIYers and residential construction. So we do invest in that space. It's just a matter of like how much of that is kind of within the like making construction more efficient as our like main kind of mission. And one criteria that we do look at when selecting startups or investing in them from the brick and mortar side is how much value can we add to that company. So when we look at investing, we want to make sure that if we, at the time of investment, we know that we can either it's facilitate introductions or talk about strategy or, whatever that we do to help with that company. We want to fundamentally change the trajectory of that company when we invest. So when we talk to these startups, we want to make sure that, we have the network, we have the experience, we've got great ideas about, how can you, either distribute quicker or how do you get access to suppliers or whatever. We want to make sure that we can definitely add that value to that startup when we invest.
Awesome. Thank you.
Awesome. Thanks for coming on. Do we have to do a quick time?
Yeah, I think this might be the last question.
Okay.
Yeah.
Hi guys. So you were basically referring to replacing Procore. So when I talk about Procore, that's like a single source of truth. So what is the one thing that I have realized walking across the entire industry is people are not using data as efficiently as it can be used, and a lot of things can be taken out of it, which would basically mean starting on from search, collaboration, estimations, right? Uh, Search being a larger part of it to reduce a lot of delays and reworks, and beyond this, estimation is something that will always be there on top of search, right? So my main question goes to you about is, if there's a startup or if there's a company that are looking to analyze or use this data for search, and then build a foundation of data, and then actually look to solve all these smaller problems to reduce the reworks, will can it have a really big impact on the industry?
I think anything to do with reducing rework can have a huge impact on the industry. I think it's more, I just haven't seen anyone build the right type of solution to solve it where you can scale and have a really easy ROI. The big challenge with reducing anything or preventing anything is you're kind of selling a future, right? So it's like really hard to, because I spent a lot of time in BIM and VDC, right? And the whole idea behind that is, I'm going to prevent you from having issues in the future. And it's really hard to sell that versus like, I'm going to reduce the total number of hours that you spend doing XYZ. So if that is the big problem that you want to solve, I almost want to think of it in terms of like, how do I either solve that in a way where you can sell something that is very easy for someone to understand that is not preventative? Because anything that's preventative, I think it's just a really hard way to like sell or explain stuff, regardless of, whether or not you have the data to do it. Because I think, one can also argue that a lot of data that people have is actually not enough to figure out if there are problems that you could prevent in the future.
Got it. So my basic thing was revolved around, actually, if you were spending roughly about 35% of your entire time during a week on searching out of stuff, which might be there on day 10, and you are now on day 30. So looking at everything with actual citations and actual references could actually make a big difference. That was what I thought. And I would want to know your views on the same. And just another question is, how do you see BIM models, 3Ds and 2Ds going ahead, and the entire standards of PDFs going from PDFs to actually 3D?
I think we've tried to do that for a long time. We may be getting close to it. We are seeing startups that are trying to do, 2D PDFs to 3D models. What I would say is today, we are no longer constrained to the 3D model. There was a time in construction where 3D had the best information and it was the best form of data to analyze and do calculations and that type of stuff. Nowadays, you may not necessarily need 3D. You can do that with 2D plans because you're almost creating like a synthetic 3D model, right? To understand, spaces, location, and things like that. So do you necessarily need the compute power of like hosting and, like Revit files are huge. They're like gigabytes and gigabytes of, all these complex shapes and geometries that you may not necessarily need anymore, right? So I think we're at a stage in the industry where we can almost rethink what does it look like and what is the type of data and what format do we need it? And I think it's going to be a blend of a lot of PDF and 2D because that's just how a lot of the industry is comfortable with using, reading, understanding, and building off of. And the 3D side, I think we're going to use it for maybe more unique use cases. But I think we're at a stage in time where like we have the technology to be able to really rethink, what is the purpose of 3D and how are we using 3D?
Got it. So one last question is, when you guys plan for your cohort, so looking at startups which can blend in all these PDFs, 3Ds, 2Ds, RFS, all kind of files into a single source of truth, and then providing on top of data, is that something that you guys look at or have looked at before?
We've definitely looked at a lot of companies that are tapping into all of these different types of data and doing something with it. I wouldn't say we've done a lot of investments in that space. I would say traditionally we've done more like workflow tools, at least in the Formwork lab side. We've done a lot more like workflow tools. But yeah, even on the brick and mortar side, I think we haven't really done anything that's kind of like pure search or anything like that. Just because there are some horizontal search tools out there like Glean that are doing fine. I'm not saying they're perfect, but they're doing fine. So we're still trying to figure out, like, as you're looking at data and data access, what types of tools can we leverage that's kind of off the shelf horizontal. But then again, we also know that construction uses a lot of GIS data. We have Revit files. We have, all these different file formats that not many other industries care about. So there may need to be a little bit of like a verticalization of that. So I think there's still an opportunity. We just haven't done an investment in that space.
Got it. Will actually looking out going into flow or workflow actually will make it more investable and more likely to be adopted?
I think so, because if you're just selling a search tool, it's really hard to convince people that, like, oh, I need to buy that, right? Especially since, there are companies that have everything backed up into SharePoint, and Microsoft has a search tool across SharePoint. Ignite customers, they have a search tool across, everything, and Ignite connects with Cohort plus ACC plus like SharePoint plus anything else. So I would say like that is probably like a really big and hard enterprise sale to the IT team that I don't know if I would necessarily back, just because it's like, implementation's hard, you need a big team, and there are a lot of horizontal solutions who will probably eventually focus solely on the construction space and then build all of those connections that we need and to understand, metadata from all these other file formats. So yeah, workflows are a lot easier to sell into the construction space. And I think, ROI calculation of if you adopt this, you'll save X number of hours. I think that's very easy to sell.
Got it. Thank you so much for your time.
Awesome.
Thanks, Anne. So just want to say thank you everyone for jumping onto our webinar. I'm sorry for anyone's questions that we weren't able to get to, but you can always just drop us a note on LinkedIn and we'll respond when we can, or I will definitely try and respond to you as well. And we have our applications open until January 4th. So if you want to apply, please go to our website and just apply then. So thank you for all joining.
Thank you all for joining.